Hey everyone, in this video, we're going to be talking about the Strat, what it is, how to trade it, and step by step, I'm going to be showing you how you can implement this today, Not just talking about the strategy, but actually telling you how to trade it, right? How to set PTs, how to develop a trade plan with this. Okay. Very good strategy. All right. So whether you are a beginner trader looking to learn more about the strat, or whether you're an inexperienced trader that's been with me for a while here, I'm going to show you what this is. Okay. But first off, what is the strat? The strat is a framework, a way of looking at price that was created by Rob Smith. May he rest in peace. To give you signals, to give you a way of looking at price to tell you like whenever certain things are about to occur. Like, for example, indications, signatures will display themselves in price that will tell you where a reversal is imminent, where a continuation is more likely to occur than than not. Everything that I'm going to be teaching you in this video, it 100% works. I use this alongside ICT concepts, of course. I use like a combination of both to consistently month in, month out, pulling consistent profits from the market. So I grabbed this little sheet from somebody else that that I found on social media with the signatures, with the patterns playing out. And we're going to go over this. I just kind of want to show you it. Many people that trade the strat, how they approach it. And I do a lot of I do it a little bit different, and I'm going to tell you how I do it, how to implement it. But these are the different combinations that you can use with the strat. Okay, so I'm just showing you this, and then we're going to go into the charts, and then we're going to bring it all back together. Okay, because there's certain combinations that I use that just do wonders, right? It's so powerful. It's so high probability when you have certain combinations that I'm going to show you in this video. Okay. But to go over the basics first and what they are, what is a one? What is a one candle? So a one candle is essentially a inside candle. So for example, if you take your focus right here, you see how this candle right here where my cursor is moving back and forth? You see how that candle did not take out this high of that previous candle. And you notice how that candle did not take out the low of that candle. So it's in between. It didn't take out the high. It didn't take out the low. It's inside. That's a one candle. A two candle is whenever, so for example, you see how price comes up and you see how it tags out this high. That makes that a two candle. You see like right here again, it comes up and tags out the high, two candle. Okay, it's a bullish two candle. It is a bullish two candle. You see like right here, this candle comes down, boom, it takes out that low. We have a bearish two candle. See how it comes down, takes out that low? It's a two candle, but ooh, there's something different here. There's something different here. There's something different happening right here. Whenever price comes down and it takes out a previous low like this, it's a two candle, but it's a failed two. It's what you would call a failed two. And that's what I'm gonna be in over because there's a few variations with the strat that I absolutely love. The failed two is one of them, but there's also another one that I want to go into that is just magnificent, and it sets up just incredible continuation deals within the proper context, of course, because context is important. If you are a pattern trader and you're going in blindly looking for patterns, I don't care if you're trading ICT concepts. I don't care if you're trading the strat, you're going to fail. If you're just going in blindly and you're trading any old pattern that you see, context matters. And that's the whole point of this. Like what I'm doing right now is I'm giving you like the basics, all right, what the candles are. But the big thing that I'm going to do here is I'm going to show you how to use it, and I'm going to show you how to execute on it and develop a strategy with it. That's the big thing here that we're doing. But right now, going over the basics, this is a failed two because it took out that low. All right, because it came down. This candle right here. Look at my cursor again to go back one candle. That was a bearish 2. This is a failed 2. So because it took out that low, it failed to displace. It's a failed 2. Okay. You see this right here? Came up, took out that high, failed 2. Even right here, look. See this right here? Came up, took out the high, 2. Failed 2. Booms, folds. So the simplest way I can put it is when we're talking about a 2 candle, you understand what a swing low is? If you don't know what a swing low is, a swing low, you have your lowest low in the middle, higher low on the left, higher low on the right. You know when prices like consistently tacking candle high after candle high after candle high? Like those are twos, 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 twos. And then of course right here, you see it comes down. And that's another example of a 1 candle. Because you see I just barely missed the high. It didn't take out the high. It also didn't take out the low. That makes it a 1 candle. Now, a 3 candle, which I love the 3 candle. And once more, I'm going to show you how I use it. But the 3 candle is whenever you have price take out the low of the previous candle. So you see how this candle right here, if you follow my cursor closely, took out the low of that candle. And then you see how it came up and it also came up, took out the high of this candle, closed above the high of that candle right there. See that right there? Whenever you have that scenario where it takes out the low, but it also takes out the high, like this candle right here did, where my cursor's moving, that makes that a 3 candle. And what a 3 candle does is a 3 candle is giving you a indication. It's tipping its hand to you and saying that a continuation is likely to occur in the near future. Like this is like the igniting push that's gonna start that continuation. The failed 2 candle is an indication that a reversal, just like we talked about over here, it's an indication that a reversal is imminent, that a reversal is right around the corner. Okay. So the 3 candle and the 2 candle, of course, like, that's what I use the most. The inside candles, not as much for me personally, but again, you're going to have that to explore because there's ways to try, as I showed you with that cheat sheet, there's ways to do it. But what I want to do is I want to show you real examples. Okay. Because as I mentioned, context matters. And if you want actual results with this, consistent results with this, context matters. And I'm going to show you how to actually use it in the correct context here. Because I didn't get to the point where, as I just showed you a second ago, I didn't get to the point where I'm making, 70 grand in a month, over 70 grand in a month, just by going in and trading dilly-dally, dilly-dally pattern, right? It don't work like that. So I'm going to start with failed 2. And then I'm going to go a little bit more deeper into how to utilize the 3 candle. And also, there is a very, very, very powerful thing you can do when you combine the failed 2 and a 3. And I'm going to get into that as well. That you don't see a lot of people talk about. And it just is going to, it's just going to absolutely skyrocket your success rate. Okay. But I was talking about a failed 2. It takes out a previous low. It fails to displace, right? So here's how I used the other day. Now this works in Forex. It works in futures. I'm going to go over futures examples too. I'm going to do both. Okay. I'm just starting with Forex because it's the same thing here. Same, price is price. So you see right here, price is coming down. It tagged out that low, right? You see that candle right there? Look at my cursor. Follow my cursor. See how that candle came down and it took out that low? That's a 2 candle, right? Yep, it's a 2. And then this thing came down right here. It took out the low, which makes it a 2 candle. But then what happens into the close is it fails to displace, which now makes it what? That now makes that a failed 2. And what a failed 2 indicates is that a reversal is right around the corner. And why is that? Like, because let's think a bit deeper. Like, why is that? Well, I just told you earlier that everything revolves around liquidity. Okay. And I want you to think of liquidity as the fuel for price. So you have liquidity above and below each and every single candle that you see on this chart. So there's liquidity above that candle, there's liquidity below that candle. And that candle right there, that daily candle, it came down and it took out the liquidity beneath this candle. And it even took out this right here, which is daily sell side liquidity, this swing low, which is an even bigger liquidity pool. So if you to take it up a notch, right? You don't even got the previous low, but you got a daily sell side liquidity pool. And let me make this very clear, because remember, price is fractal, meaning what occurs on one time frame occurs on a higher time frame. So even though I'm using a daily chart right now, what I'm teaching you on this daily chart can be used on the 4 hour, can be used on the 1 hour, the 15 minute, etc. Like if you're a scalper, if you want to take it to the next level and you want to make that reversal even higher probability, you could utilize a higher time frame liquidity pool to frame the failed two off of. Because the failed two is where price comes down below a previous candle and it fails to displace. But what happens when you take an even bigger level that was recently formed, for example, a swing low, if you look at my cursor, and you have a failed two off of a swing low, which is just simply a bigger liquidity pool, and the previous low. So you got the previous daily low and you got the swing low, and now you got a failed two. Folks, I'm telling you, when you have that scenario right there, when you have that scenario happen right there, the odds of you getting that reversal into this high right here become astronomically high probability when you see that happen. When you combine the previous low fails to displace, but you get a failed two through daily sell side like this too. Whether you trade futures, whether you trade Forex, whether you trade crypto, I don't give a damn. When you get that scenario, that becomes extremely high probability. Okay. Now, here's what you can do. Cause I'm giving you a game plan here. I'm not just giving you the like what it is. I'm showing you how you can trade it. Okay. And I'm gonna show you how to trade other ones as well. As I mentioned, I'm gonna show you how to trade like the 3-2. I'm gonna show you how to trade the 3 as well for like continuation deals. But look, here's how you trade this failed too, because I had this. I plugged this real time in my free Discord chat. All right. And if you want a link to the free Discord chat, there's a link to that in the video description where I plug this stuff real time. No hindsight. Right here. See this? Look. Drawing to previous day's highs. Okay, you see that? Yeah, we had a 4 hour shift in there. See, 4 hour shift. Because when you go to the 4 hour chart, what do you see? There's the high of the daily. Remember, we already have this daily sell side over here that was taken. So now on a shift, because now what I'm doing is I'm telling you how to actually trade this. What I like to do with the strat, what I like to do with the strat is, in a lot of my cases, I'll use it as a higher time frame candle for direction. And then I'll go to my lower time frame, and then I'll hunt for shifts on the lower time frame. That's the main. I'm going to give you a few other examples as well and like different ways to do it, but that's the main way that I approach it. I use the higher time frame candle, whether it be a failed two, or I mean most times it's a failed two for me, to give me that, like to tell me like when the reversal is right around the corner. And then what I will do is I will go to the lower time frame, and then I will hunt for my shift in the lower time frame. In this case, it was a 4 hour. So, because with a 4 hour, with a high probability shift, this is where I combine it with ICT concepts. Whenever I get that daily, the fail two, and then I go to the 4 hour and I see I have this shift. What constitutes as a shift? Well, you need a few things for a high probability shift. Okay, and folks, if you are enjoying this video, not to kind of break the stride, break the flow, but please, if you are enjoying this video, make sure you leave a like on the video, and I want you to comment below the strat. Just comment below the strat. Why? Because it helps with the engagement, and then it helps more people find it. and it helps more people actually get good information. This is 100% free content. That is better content that you're going to get in 99.9% of the courses out there. So please, if you know, just that's all I ask, okay? But as I was saying, strong close right here above that high, and we got that fair value gap right there, okay? With a high probability shift, number one, you want to see a significant liquidity grab, okay? Do we have a significant liquidity grab? Of course we do. Let me refresh your memory. You have daily sell side right there. You have that previous low right there. That's liquidity. Even below that low, even below previous day's lows, that's liquidity. In many cases, that'll even be enough. In many cases, that'll be enough. But my point is, this takes it to that next level. So that's number one. You have significant liquidity taken. You need step number two for a high probability shift is you need to see the fair value gap, and you need to see the strong close above the short-term high. So when I say the fair value gap, that is right here. And I'll leave a link to the video that I made on fair value gaps in the video description, ICT concept. The high of this candle, where my cursor is pointing, and the bottom of that candle right there, they do not touch, and that leaves behind this gap. All of your high probability shifts will have that gap, okay? And you see this right here where my cursor is pointing? Highest high in the middle, lower high on the left, lower high on the right. That makes that a short-term high. And you see how that candle right there had a strong close above that short-term high. So we have the significant liquidity run. We have the fair value gap. We have the strong close above a short-term high. And there's one last thing you need. There's one last thing you need for a high probability shift. And this one little thing right here is where 99% of the people that fail trading market structure shifts, this is where they fail miserably, is they don't have an opposing draw. You've been in that case where you get shift after shift after shift, or what, at least what you think is a shift, but then you just get tagged out over and over and over again because you don't have an opposing draw. And this is how I trade the strat a bit differently than a lot of folks, because as you see in the cheat sheet, and I'm not saying this is anything wrong with this, because again, context matters, right? If something has legs to run, then this is a way that you can do it, right? But I'm just telling you how I can only tell you from my experience, my approach with it, and what works for me. Because what a lot of folks will do with the strat is they'll have that, and then they'll enter in a breakout above this high, and there's nothing wrong with that. So, for example, when you get something like this, where you have that daily candle, you see, what is that? 35? Yep. This gives you in a ballpark what to expect if you're trading it that way. So if you see a candle fail to displace like that and it's overall bullish, what it does is like how a lot of folks will trade the strat is they'll trade the breakout back above that reversal, or they'll play the reversal, right? But that gives them that ballpark of what to expect. What I do with this is that becomes my PT, because that's like the very, very, very next, because I don't care about leaving money on the table. I leave plenty of money on the table. All right. I'll take profits and I'll see things, something just go to the moon, and I don't care, because I'm just focused on getting on base, taking my base hit. Because as I just said a second ago, the final piece to a high probability shift is the opposing draw. And that right there is this is the very next opposing draw on the daily. Okay, that's the failed 2. And the high of that candle, there's liquidity there. So what that ends up being is my PT area. And then what you can do is you can go in here and take your Fibonacci from the low to the high of where that displacement leg, or where that push up was created, enter it at a discount, and run out the high. Just like that. You see? And that's how I do it. Can you see it found resistance? Because, well, now it's got liquidity to work off of. But it comes down to the discount, and you take it up into the high. You had the failed 2 on the daily off of all that liquidity. And it told you that that reversal was around the corner, and it was. All right, I'm going to give you another setup from this week that I took with AUD/USD. And this is with a failed 2 example. come with the receipts. See, like right here, free Discord. Right there. See that? 15-minute bearish market structure shift. So I just talked about how you could use, like I used an example with the failed 2 on the daily. But if you've been paying attention, you remember I said price is fractal. So then we have the 4-hour. They did the same thing. So you got this thing pushing up, and you see all of this forward candle right here. This opens at 1 and it closes at 5. You see how it took out the high of this candle here. And you see how that failed to displace. That's a failed 2. Because it took out it. Now look, this was a 2. Look, this one right here, that was a 2. That right there, 2. This one right here, failed 2. Because it took out the high, it made a new high, but then it failed to displace. Okay, so that's a failed 2, and it is indicating to me, it is telling me that a reversal is right around the corner. So the point that I'm driving across here is I use failed 2s to frame high probability shifts. And while I know a lot of people, they will enter on the low of the failed 2, a lot of times what I'll do is that's the very, 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 very next draw. Because whenever that happens, folks, I know I have an opposing draw. So that becomes my PT right there, the low of the failed 2. I'll use a higher time frame failed 2, and then I'll go into the lower time frame to look for my shift, my market structure shift, right? And this is where I like utilize a little bit of ICT, like with the fair value gap, etc., to time it. This candle opens up at 5 o'clock. So now what you're going to do is you're going to go in and you're going to look for your market structure shift. So same thing, look, here is 5 o'clock. You see this? See this, right? We're about to come into 5 o'clock. Fibonacci from the high. See? You see I also got that horizontal blue line on here? Because that was the previous candle high, remember? And what's that? That's liquidity. That's liquidity that it took. But remember, we have a failed 2. So it's telling us that it respected that liquidity. It doesn't want to move higher. And the low of the failed 2 is literally my very next draw. You see? So then what price does is it sets up in the premium, and then it comes down to attack the low of the failed 2, which is my PT. Okay. In a second, I'm going to go to futures here in example. I'm going to go to futures here in a moment as well, folks, because I do futures every single day as well. Plug that in the chat in the mentorship chat every single day. And I'm going to show you how to use like the 3 as well. But I really want to drive this point across with the failed 2 and how I approach the failed 2 scenario. Okay. Another example was Euro GBP. This came down because this is all from last week. I mean, literally, week in, week out, you see this stuff repeats. See how that took out all this sell side down here? Not only did you have previous days lows, but you had that daily sell side, that swing point in there. So look, that was a 2. See, look, see how that thing came down, took out the low? 2. What's this candle right here? Look at my cursor, follow my cursor. What's that candle right there? Where my cursor's going up and down. That's a 1 candle, because AKA an inside candle, 1 candle. It didn't take out the low. It didn't take out the high of the previous candle. Whenever that happens, that's a 1 candle. Okay. And it could just be used as more liquidity. So then this comes down, making a new low. What does that become? Another 2 candle. But when it fails to displace, it now becomes a failed 2. And where my focus immediately goes when that happens is the previous high. While you can play the breakout above the high if you're a breakout trader, what I like to do is I like to use that as a PT, because I know there's liquidity there. I know it's like my very, 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 because I'm fine with base hits. I'm fine with, I don't need to catch the entire move. That becomes a nice PT. Same process, I'll go into the lower time frame. This one was a little bit different, and that's what I want to do. I want to show you a little bit of a different scenario. This one is in a 4-hour shift. I don't have any type of 4-hour shift, so then that's when I go down to my 1 hour and I look for the same signature. Look, see this right here? Look, same signature, folks. Look, I got the fair value gap. Once more, an ICT concept on the displacement, which is necessary for a high probability shift. I got a strong close with a short-term high. Now all I need to do is wait for a pullback. Draw out your Fibonacci from the low to the high. Boom. I want to pivot to futures now. And I want to talk about futures. So again, a 3 candle. A 3 candle is when price takes out the previous low. So like for example right here. It took out that low. And then it also ends up coming up and taking out the high. You see how it clears that high? And what that tells you whenever that happens is that there's a continuation about to happen likely. So then what you can do whenever you see a 3 candle like that, that's where you can go in, you can get on board. And then you can look to piggyback this thing up into your next key level of resistance. You see? So that is what a 3 candle, that's what it looks like. Takes out the low, and then it gets a close above the high. Now, I'll go back over to NASDAQ and ES here in a moment. But this popped up in my head. I had a couple scenarios last week. I can't remember off the top of my head what they were that had this. But what I'm about to show you right here is so powerful. It is so powerful, and I don't ever see anybody ever talk about it either. But whenever you see this happen, I mean, you know you got a nice deal. And what I'm going to show you here is I'm going to show you how to combine the failed 2 and a 3 to get an extremely out of this world powerful combination. Okay. So you can see how that daily on gold in this particular day failed to displace. That's a failed 2 on the daily. So I know, like, my focus is going to be for that low to be ran out. But here's a tip. You're going to want to write this down. Get out your notepad, write this down. Very important. Okay. Whenever this happens and you see a failed 2 on a higher time frame, so in this case, the daily, go down to the next lower time frame, in this case, the 4-hour. And if you see that happen on the daily, a failed 2, and then you see a 3 at the very top of where that happened, see how that took out that high, took out that low? You know you have an extremely high probability shift in market structure at that point that's happening. You see? Because the 4-hour already told you that it failed to displace. Okay, look, there's a shift. See that low right there? How it had that strong close, how it had that fair value gap. It has all the criteria for a high probability shift in there. And then right here, price pulls back into a premium, and it allows you to get on board for a short. But my key thing here that I want to drive across is you had 2 things happening. You had a failed 2 on the daily. It took out the high. It failed to displace. It's a failed 2. But then whenever that happens, go to your lower time frame, and then in this case, the 4-hour. And wherever the high was of where that failed 2 happened, the high of where the failed 2 happened, where the shift originated. Stay with me. Where the shift originated, look for the number 3 candle. That took out the high and it took out the low. So you know it was explosive. And that's what you want to see with a shift. You don't want to see some old dilly-dally choppy move for a shift. That ain't a shift. When you see something that's so dilly-dally and choppy and weak, no, you want that you want that 3 candle. You want that 3 candle to show that aggression, and that's what it does. And then look, see, it's like, look at that push lower. Look at that push lower. But we had a 3 on the 4-hour. Took out the high, took out the low. And so you have a failed 2 on the daily, and then you have a 4-hour 3. And you could do that same thing with other time frames. I'm just using that example. But for example, let's say you had a failed 2 on the 4-hour. Then go to your 1-hour and look for a 3. Say you had a failed 2 on the 1-hour. Go to a 15-minute. Look for the 3. Say you had a failed 2 on the 15-minute, right? You probably get the gist at this point, but you see a failed 2 on the 15-minute. Go down, 5-minute, look for 3. See where I'm getting at? Very, very powerful stuff right there, folks, what I just showed you on a platter. That a lot of people will charge you for that. But you got it for free right there. So again, I'm gonna go back over to futures, and I'm gonna give a couple examples how to use this in futures. But once more, if you are enjoying the video, make sure you leave a like on it. Make sure you subscribe and comment below the strat, and I'll make more videos with more examples in the future. Okay? Because if there's no comments, well then there's no demand. If there's no demand, well then, well it's just there's no reason for it. So heck, I'll just take an example from Friday. I mean, it's Sunday at the time that I'm making this video, and this is from Friday in the mentorship chat. I do all the future stuff in the mentorship chat. I do have the Forex stuff though in the free chat room. So if you're a Forex trader, that's all in the free Discord chat room. But I do keep this strictly to the mentorship chat right here. See, this was plugged right there on Friday. And I use the Strat for this. I use the Strat to forecast this. So what's this right here? Let's actually go to replay real quick. What's this right here? Because, you see price, it just came down. It pulled back into a discount marketplace. It took out 15-minute sell side in the discount, so it collects liquidity right there. And I waited for this candle to close, as I do with futures here. That's why I tell my mentees, just let it kind of play out here. Let it play out at the bell, at least first 15 minutes, see what it wants to do here, and see how it responds. Because it came down, look, it took out that low, because this was making twos, right? Look, see this right here? Look at that candle. 2, took out the low, right? Look right here, 2, look right here, 2. These are all 2 candles. And then right here, 2, it's coming down. Oh, psych, nope, boom, comes up, right? So what do we make of this? Because what that did right there was it came down and it collected that liquidity right there. And right there, it took that out. But not only did it do that, but it took out the high of the previous candle, had that strong close above it. So like, what does that make this now? What does that make this candle now? Take a moment to answer among yourselves. What does that make that candle? We've talked about the 2 candle in depth. That's not a 2 candle. That is a 3 candle. Because, like, if you really wanted to, maybe it'll help you to think of it like an engulfing candle, right? But it takes out the low, takes out the high, engulfs it. It like eats that entire candle. It takes all this liquidity is fuel, and then it comes up and it like eats that previous candle and gets a strong close in there. What that tells you is that a continuation is in the near future. It has all the sell side. I mean, it's a bullish trend, clearly. Like, this thing's been bullish. It pulled back into a discount marketplace. And then we get at 9:45 a 3 candle. Okay. Look at all that sell side is coming off of in there. And you see, timestamp, no hindsight, 9:46 a.m. I plugged that because I saw that happening. I saw that exact signature happening right there. So I understand, okay, this already has this sell side taken. I have a 3 candle, which is telling me that a continuation is right around the corner now. Because it has no incentive to move lower. It already has a discount. It took out sell side liquidity in here in the 15-minute. So what you can do then is, of course, you can get on board. And then you can piggyback that thing up. So literally you can just get in, risk that low right there. See that right there? Look at my cursor. Risk that low of day, and target the high. Or if you want to let it run, you can let it run. It's up to you in your own personal style. But y'all know, or if you've been around on the channel for a little while, you know I don't care about that. I like base hits. So just run out that high example. And there's your continuation that it told you that it wanted to do. If you would like week in, week out, every single week, for me to give more examples of this, of the strat in play, please leave a comment below saying the strat, and I will continue to. And I want to shout out another channel. I'll leave a link to another channel in the description. Because this channel, I mean, I've talked about the terms and what they are, but it's more so about how I use it, right? How I use it in my own trading. If you want to learn a little bit more about the basics, maybe if it's still like a little bit, if you're still like a little bit unsure, I'm going to leave a link to Sarah the Strat Sniper, her channel, in the video description. She trades the Strat, and a really good resource, You can go learn the basics over there. So check that out in the video description, her channel. Okay. But if you do want more videos on this, leave a like, subscribe, comment below, and I'll keep it coming, folks.